Well, our global traveling Miningweb Weekly star, Peter Major, is in the other side of the world at the moment. He's in Idaho. I've got lots to tell him about what went on in my life yesterday because it's got a lot of relevance with what we will be focusing on in this conversation. What is happening to the South African mining industry's profitability? Good to see you, Pete. Yesterday, I was up well before dawn, drove through to Cape Town, went to Parliament, sat in the lockup, read documentation from the Treasury for about 6 or 7 hours, and then got to not interrogate, but certainly ask questions of the finance minister ahead of what is called the MTBPS here, the mini budget. But what was really interesting in all of this, the thing that really stuck with me was Lesetja Kganyago, the Reserve Bank governor, saying we are now going to anchor ourselves at 3% inflation. That's our target. We're going to have 3% inflation in South Africa. We're going to turn South Africa into a low inflation geography. And that is because inflation hurts the poor the most, and we're determined to do that. Now, if we can just suspend our disbelief for a moment, because I'm sure you've got some thoughts on this, let's just say that he gets it right, that the finance minister and the Reserve Bank governor actually get it right, and they bring South Africa's inflation down to 3% or lower. What impact would that have on the mining industry?
Boy, Alec, a good example is what happened to us under Chris Stahls back in the early 1990s. And then South Africa was so used to this entrenched double-digit inflation that somebody strong had to really think out of the box. And Chris Stahls said, look at the increase I'm giving my staff. They are all getting single digits. And I expect business and the rest of the government to follow. Because he says you have to get that entrenched in the individual's minds that inflation is going to be lower every year. And once they start believing that, it's perpetuating, self-fulfilling. And I think if anybody's got credibility in government in our country, South Africa, it's our Reserve Bank governors. And that is a worthwhile goal. And the benefits are almost incalculable, but they're huge. And if anybody wants a good example, go look at Switzerland. And maybe they've overdone it. The Swiss dollar is now 79 cents to the US dollar, but the most stable, rock solid country on the planet. And their IQ is not higher than our IQ. I don't believe they can take more pain than us, that they can work harder than us. They are sensible and they're consistent. And if that message can be pushed through the rest of government, it'll go into the country. But government is supposed to lead. That's why we call them leaders. And we're being led by our Reserve Bank chairman here. Let's hope it filters down into other ministries and departments.
Well, what is interesting about all this is that the finance minister and the Reserve Bank governor have got a long relationship that goes back many, many decades. And in fact, they got together and agreed to change the inflation target, which was 3 to 6%, down to 3%. And it was quite a big issue. It's been made a lot of, and it is the commitment of the Treasury. And Enoch Godongwana is not the highest profile or the most flamboyant or charismatic finance ministers we've had, but he certainly is the man with the greatest political heft within the cabinet. There's no question that if he talks to the president, he gets things done, and the president will listen or support him in that way. So there's a chance here, and it does appear as though Treasury, and you said yourself, the Treasury in South Africa has got it's almost a pocket of excellence, that if we're ever going to get this right, or if the country's ever going to get inflation under control, this is an opportunity. So let's just imagine that it does happen. Would that make South African mining stocks more appealing?
A little bit, Alec. but not that much. The reason people went into South African mining stocks and still do is it is a hedge against bad government. It's a hedge against unbridled spending, etc. And so if we say, oh, wow, government's actually doing a little bit better, our economic fundamentals are a little bit better, does that help mining? Yeah, it does a little bit, but barely noticeably. What's hurt mining the most is a horrendous legislation, not just the confiscation of all their assets, which we know as nationalization. That hurt it, but not irreparably, but it's what followed. If I back up just a second, we're talking about a sweet spot because our central bank, our Federal Reserve, and our Treasury work close together. The best example is the Clinton era in the United States when he had Summers and Rubin. Excuse me. That was the sweetest spot in America in more than 60 years. That's when America had almost zero inflation. Clinton was actually paying down some of the national debt. I apologize. And you had the Trioca, Treasury, Reserve Bank, a president that understood economics, and it was working great. They had less people on the dole, less people on food stamps, less people on unemployment. The stock market of the 90s boomed. So we can replicate that in South Africa, but the mining industry, the body blows that this government intentionally put on it, some of those have to be removed. And why can't we remove all of them? It's for the good of the country. Why do you have to leave those intact? It's a mindset that our government or our president, certainly our mining minister, they just can't see that they could ever change that, even though they know it would be good for the country and everybody in it.
I think you might be, I don't want to overstate it, but there are so many areas where reality is starting to dawn, where sobriety is starting to come into the picture in South Africa, that it does give you hope that into the future this is possible. But maybe let's just back up a little and have a look at some of the consequences of really poor governance by the state and the impact that has had. Now, you sent me these graphs or these charts, and here's one from the Minerals Council about costs, and costs in particular in mining.
Sure. You could not even think of running a mine without electricity or water. And who controls those costs? Government. Government has got full, unbridled, total control of those costs. And we've said for decades, if they can't keep those costs below inflation, then those faculties, those facilities should be taken away from government and given to someone who can keep those cost increases below inflation. And government went out of their way to pluck all the feathers off, to plunder Eskom for decades. They plundered water affairs, and we got compensation of employees. Well, is that slashed union? Yeah. The union employees, in fact, all mining employees have had way, way above cost of living increases, way, way above inflation for literally 2.5 decades. And that would be okay if the productivity was rising at the same rate. But the productivity right now is just about as low as it's ever been. Tons per man, ounces per man. And I will say that's not just in South Africa. The big complaint in America is the same. The productivity per man is way, way down. So we can give the unions and the government some of the credit for that. We can give the employees some credit for that. But yeah, electricity and water, the two biggest levers that government has control over, and they've abused that position terribly. And unless that changes, mining's under the gun. They're going to continue to have way above inflation increases, and it's going to put more mines out of business and prevent mines from forming.
Electricity in year on year to September 2025, for those who are listening and are not watching this conversation, up 15.5%, water up 11.6%. So when you see those kind of numbers, it's got to be saying to you, well, Lesetja Kganyago's got a tough job ahead of him, both him and Godongwana, to get that target of 3% for the country as a whole. They're going to have to start on electricity and water, and no doubt on rail as well, transport and storage, which comes in at nearly 5%. So those three areas which are critical for, well, the fourth one being, as you say, compensation of employees. You put those four together, that's mining. And mining is right at the top of the most expensive or the most rapidly rising prices in the country, and many of them administered by government. So get that right, then mining could actually be in for a far better run.
Alec, I'd love to get a graph of this from the early 90s, 91, 92, 93, under Chris Stultz, because mining had zero cost increases for about 4 or 5 years straight in the early 90s because the metal prices were falling so low, inflation had gone out of control, and our Reserve Bank led by example, and the unions, the employees, everybody did their part in 90, 91, 92, 93 to save the industry. And they did. They saved the industry. We still had 125, 130 listed mining companies by the end of the 90s. 90-some% of them are still paying dividends. We were putting the rest of the world out of business in the late 90s with their mining industry because we got inflation costs down so low. But it was willpower plus action, not rhetoric and pie in the sky dreaming.
The United States inflation rate has been, well, enviably low compared with South Africa's.
Yeah, it has. If they can keep it at 3%, I think it'll be a miracle. But it'll be a miracle if we can keep ours at 3%. Both sides are trying. But I'll say this. I think our government has a better chance of keeping inflation at 3% than the American government. The way Trump started out his first term, he's spending $7 trillion and he's only taken in $5 trillion. So he's got a $2 trillion deficit his first year. And this guy's a bit of a serial spender. So I could see $2 trillion deficits for the next 3 years. Why is he going to change his habits? So we have a chance of being in Africa, Switzerland here. If we hold the line and everybody plays along, we can beat the States for the next 3 years on inflation, and our currency will continue to appreciate.
Yeah, and the United States standard deviation of the inflation rate. What exactly does this graph tell us, Peter?
Well, it shows how volatile the U.S. inflation. Look how in the late 60s, we can attribute that to Vietnam and social spending. The 70s was totally out of control. The 70s was almost more a result of what happened in the 60s. It shows there's a delayed action. All the bad things that happened in the 60s, they took a little while to filter through. But yeah, by the 70s, it wasn't just Watergate, change of administration, Democrats fighting Republicans, oil price shooting up, metal prices went up, not as much as the oil. It's funny, this time we got the metal prices, certainly the precious metal prices going up like they did in the 70s, but oil, our oil, look what's 62 a barrel. Oil has seldom been this cheap relative to gold. And so at least we don't have the massive energy price increases. And that makes it even more despicable that Eskom's getting 14% increases when you got about an 8-year low coal price. You got a very, very low oil price, a very low natural gas price. And yet our electricity prices are up there at double digit. It shows how bad of managers our government is, and they shouldn't be allowed to manage any kind of economic entity.
And against that, the gold price. So in the past week, gold has had another nice little bump higher. And there are those who are saying it's only just beginning. What do you think about that, Peter?
If only that was true. And I'm afraid to even pray that's true, because I think I'm asking God for too much. I think he's granted us quite a bit already, and I don't want to overdo my welcome. So, yeah, is it just starting? I saw the headlines today. this isn't a price change, this is a regime change. In a way, that's true. Yeah, because you've got China and other Asian central banks buying gold, and they want to break away from the dollar dominance. They've given it support that gold's never had before. But how far are they willing to break the dollar hold? Are they willing to push gold to 5,000 or 6,000? I don't think they even know, and I don't know. But we're riding the back. We're slipstreaming some big buyers here. And that's a pretty safe place to be. You know, if you're doing the Tour de France, you're behind a bunch of Lance Armstrongs and that, like, it's easy peddling. And boy, our gold industry, even though it's a pygmy compared to what it was and could be, you know, instead of the 60 plus mines that we had operating for decades and decades, and we're only down to about 8, 9, or 10 now, they're having such a tailwind here with the gold price. I just worry, what are they going to do with all that extra cash? Because they are not fund managers, they're mine managers. And we know there's a big difference.
And it's been a terrific run for the gold price in rands as well, because the rand has been inflating. South Africa has been inflating more faster than its trading partners. So the rand gold price of gold has been improving as the currency depreciates. Is this not going to be saying to some smart fellows on the somewhere around the world, look, South Africa's got lots of gold still in the ground. This is the time to make the investment there and start bringing more of that to surface.
Alec, everybody knows that. They know we've got more gold than any country in the world by far. And they do know most of it's deep. And it took very rare individuals like Oppenheimer and the like that would put their money into projects that would take 6, 7 years to fruition. And boy, you really need a stable government and a stable environment, and you need investors to believe that. And, you know, even back then, investors weren't that foolhardy. So Oppenheimer led from the front, and the government assisted him. They gave special tax allowances, CAPEX paybacks, in order to encourage the local mines and foreigners to put more money in the ground. You know, accelerated capital depreciation. You got 100% depreciation, and you got a 10% bonus added to it. We're going to have to do something like that. And that's when we had stable politics, stable economy. We do not have stable politics now. We got rampant crime and corruption. So there's almost nothing the government can offer on top of what we currently have. They have to take the stranglehold of this mining legislation away. And then they're going to have to add incentives as well. And that won't happen quick, because even if you change tomorrow, and we know this government will change, just like Zambia, just like the DRC, they will eventually throw the bums out, and they will throw all their legislation out, and they will beg foreigners to come in. But we don't have a lot of open pit potential like the Congo, Zambia, and Uganda. You still need deep level shafts. So even though eventually the bums are going to be thrown out with their disastrous legislation, there won't be the inrush of capital into South Africa like there was in Zambia and the DRC due to the nature of our gold deposits. But hey, we'll take what we can get. You know, if we get a quarter of that, but we're not going to get it until the bums are out and their legislation's out.
So it's all to do with legislation. It's all to do with make it a welcoming environment. And that was the question. That was certainly the message that was being provided by Treasury, but provided by the Finance Ministry yesterday. Are they dreaming? Is it not politically able to do this? Or are you seeing some sliver of hope?
That is the biggest bullshit story, red herring ever. Our populace, our electorate will not allow us to do that. The electorate, the guy on the street did not sit down and say, let's nationalize the mines. Let's give 30% to the selected few. Let's demand 70% of mining spending go to the construction mafia and related cadres. The average guy didn't say that. The average guy welcomed Mandela because he thought he's now going to be allowed to work and live anywhere he wants. And he has the same rights as everybody else. So this is a smokescreen. I hear politicians use it all the time in all countries of the world. Our populist politicians did not invent it. They're good at pinching that kind of thing and enhancing it. They say, yeah, we would be thrown out of office if we rescinded any of this legislation. Well, then don't tell people you're rescinding legislation. Tell people I'm enhancing legislation to bring in foreign money to give you guys jobs. Put the positive spin on it.
Yeah, it really beggars belief. It boggles the mind. It drives us all crazy when we think about the realities and how difficult it is to get ideology to change. People, the worst people in the world are the ones who know they're right. And even though the facts have changed, they're not going to be changing from their side because socialism hasn't been tried properly, and so on and so forth. But putting that all aside for the moment, when we look around the world, what is the really hot spot now in mining in the world?
Boy, I may be biased because I'm in America now, so I'm surrounded by American mining and American populism. But I got to say, the United States is probably noticeably the hottest place to be doing business with. There's some huge projects here that have been on ice or debating with the Indian tribes, that have been debating with Bureau of Land Management, water affairs, decades. And now I'm hearing by executive order, and now Congress is following Trump's executive order, they are panicking and pushing through projects, and exploration is taking off in America too, because we know exploration follows. If you allow mines to develop and make money, then there's a lot of money for exploration because it knows they have a future buyer. But there's no money for exploration in South Africa because even though you find a great deposit, there's no buyer for it. So why are you going to fund an explorer? And this is the hot spot. And I think it's going to continue as long as Trump's in office. And he's got even the Democrats behind him on that. It's pretty hard for them to stand up and say, no, we're not going to allow these mines to go ahead. Some of them are saying they must go ahead responsibly. We can't trash the environment. But we're past that. To block mines on anal little bits of the tribe was promised this 200 years ago, and some chief is still holding it up, even though the rest of the Indians want this big copper project to go ahead. That stuff's being steamrolled. This is a hot area for mining now, and it's open for business, certainly for the next 3 years.
And Peter, have you been following this huge new mine in Guinea that the Chinese are getting involved with?
Yeah. There's a big project, well known for many decades, Alec, and it shows how bribery and corruption work, that for decades the iron ore price was pretty low. And so you couldn't justify the capital cost because you couldn't see a return in it. So the existing iron ore producers, they were all established, they were making money, but the iron ore price was, it was lower than lead. Anyways, in the new millennium, when we saw iron ore take off, we realized how much China had grown and was continuing to grow. Iron ore prices shot up from $15, $20 a ton to $40, $50 to $80, $90, $100. Then they went to $100, $150. Well, this Simandou project, Guinea, everyone's known about it, but it's an unstable government, so you're not going to do a long-term investment there, wondering is it going to get confiscated? And the ownership of those deposits kept changing. You had the likes of diamond traders in there, and well-known diamond traders, and you had ex-corporate financiers that were supposedly doing deals with the government, and then United Nations and World Bank were being asked to testify for and against certain of the parties. But I can say 10 years ago, the ownership bit was resolved and China came out to be the biggest holder. Rios had their shareholding cut way back. I think Billiton had a chunk there that was taken away or they gave up. They've been committed. They spent the billions. The railroad's built. The harbor's built. The mine is built. And this thing's going to go to 120 million tons in another year or two. I think they're expecting 30, 40 million tons this year. Now, that's maybe only 5 or 10% of the world export market. But hey, 5 or 10%, we've seen 2% margins sway the price. And so, yeah, China is now securing ore of its own, but the government doesn't want to give that ore away at discount prices either. So the government of Guinea can still have some effect, even though China's put in the big chunk of investment. And Rio's promising them, we're going to get premium prices for you guys. So they're going to score brownie points. Government's talking about doing some beneficiation, pelletizing, making it into pig iron. But I think that's poppycock, Alec. That takes big money. That takes cheap electricity. And, economics is a good way to steer public policy. If the economics give you bigger bang for buck, digging it out of the ground, railroading it and shipping it, that makes more sense than government partaking or forcing industries to do uneconomic smelters and beneficiation that's not going to give payback to the investor or even to the government, really.
Is this perhaps almost a template for other similar projects on the continent, given that there's a lot of minerals and a lot of rich deposits in Africa that have not been exploited? Is it likely that we will see the Chinese coming in and doing more of these kind of deals where they put the big money up, these massive projects, because they know how to do them? And I believe this is the biggest mine in the world in Guinea that is now being developed.
I don't know if it's the biggest mine in the world yet. Geez, Vale's got huge ones in Brazil. And I think the one in Australia, can't believe anything's bigger than that Pilbara. It depends if you say an individual mine or a series of mines. But it's big, and it's got the potential to get even larger. And yes, this could be a template for Africa. We're seeing it with Robert Friedland in the DRC. Robert brought in the Chinese to help fund an enormous copper smelter there, the most modern flash smelter built, one of the largest built. China says they're not going to get involved in any more smelters outside their country. They don't want to give away beneficiation technology and IP. And they've got more than enough capacity. But it shows African governments, if they make reasonable demands, there's a chance they'll get fulfilled. The DRC demanded that smelter be built. And we know it takes a lot of electricity, so they didn't demand that Robert Friedland refit the hydroelectric plant, but he did because they needed the electricity for the smelter. So, yeah, governments have so much to offer and so much good they can do for their people. And it shows foreigners, they will work with them hand in hand as long as it's fair and reasonable. So this government can learn from that. Is anyone going to come to a deep level mine here? Our government would probably have to bend over so far they do somersaults, and we can't see them doing that. But hey, let's start with some easy ones. Let's get back a couple large coal mines instead of hundreds of Zama illegal syndicated mines. And maybe on the copper side, we got this whole Northern Cape. We got big deposits in the Northern Cape. We know about, they're sitting there. And government, private industry would do well to work with some good Chinese companies there. Let's develop it instead of laying fallow while the rest of the world enjoys these high prices.
With this big new Guinea mine coming on board, should we be nervous about the prospects for Kumba, which is also an iron ore producer?
Indirectly, it's going to affect Kumba. Its ore grade is about as high, and it's got a very efficient railroad and harbor. South Africa does not have an efficient railroad and harbor. We've gone out of our way to make it the world's most inefficient railroad and harbor. So it does put constraints because Kumba could have grown the last 2 decades instead of shrinking, and they could have retained their percent market share. But yeah, if this Simandou gets up to 100, 120 million tons, and it means China, that's 120 million tons China doesn't have to buy from third parties, it's probably going to drop the iron ore price. And at $105, it's got room to drop. Everybody's making too much money at this price. This iron ore price could easily go down $20, $30 a ton, and people are still making money. So yeah, Kumba's got to be concerned here. you've always got to be concerned wherever you're at. You want to be at the top of the profitability curve. You want to be at the bottom of the cost curve. You want to be at the top of the efficient curve. And we based all our mines on world-class comparisons. What's world-class? All our gold mines, platinum mines, our 5-star safety ratings when I got here in 82. It was world-class. That's our benchmark. Now, we got a government that can't imagine trying to do what it takes to be world-class. But we've got to instill that in everybody here. And Kumba would like to, but geez, you can't do it when government controls your railroad, your electricity, your harbor, your water, and your labor legislation. When government's telling you who to hire, who to give your equity to, and even worse, who you have to buy your supplies to, you're totally constrained. So yeah, Kumba's worried. They have been for a long time because they don't have control over all these things. Government does.
One of the other things to come out of the project of the mini budget yesterday was that the South African government, through the Development Bank of South Africa, is going to be investing 8.5 billion rand, and the private sector similar amounts of money in the Northern Corridor railway line for Transnet, so they can start getting that fixed up. I see you smiling. Do you think it's again something that maybe they are talking bigger than the action?
They've talked about it for 2 decades, and it could be viable. The big question that mining industry execs tell me is who gets to spend the money? They are not interested in giving Transnet the money to spend. So they said, we'll commit to projects like that, Peter, but we would rather right now commit to projects that fix our railroad and fix our harbor. And we've shown the government what needs to be done. And if they just loosen the reins a little bit, if we get to manage that spend, we're only too happy to go partnership with the government. But until now, governments they want industry to contribute the finance, but government wants to take total control over how it's spent, Alec. So it's actually a simple dynamic. Would our mining and construction business go for this corridor? I think if they were given total control, if government says we'll match you or we'll give you 60, 70%, you've got to fulfill certain requirements, but hey, we'll let you spend it. The problem is that hasn't been done for a long time. I'm not sure our mining industry would have really effectively spent that money on a railroad the first year or two because they haven't had the opportunity. Governments strangle it and kept every little aspect. But hey, as long as it's related to their share price, the mining companies will spend it pretty efficiently, pretty quick. They may have a year or two of learning how to build a railroad, how to fix up a harbor, but they've got international experience. Anglos has that. So utilize the international experience. You couldn't just hand that money to Exaro or African Rainbows and expect them to do it. But, well, Billiton's just about out of the country now, unfortunately. Glencore, do they know how to build a railroad? Yeah, see, the expertise. We've driven that expertise out. We've pensioned them off. We've chased them out. A lot of them have gone overseas. So these are big numbers, but who's spending that money? Who's going to build these projects? That's the question people want answered before they put their buck in.
Well, there's clearly a lot of ground to be made up, some big challenges to be achieved before all the good news talk can be transformed into action. Peter Major is the mining director at Modern Corporate Solutions, and I'm Alec Hogg from biznews.com, and this has been your Miningweb Weekly.